Hey, what's going on, everyone? I want to explain how to use the Fibonacci indicator, okay? And I know a lot of people get confused about this tool and they don't use it right. So I'm going to show you how to use it properly. So just a very brief overview of the Fibonacci trading tool, okay? The idea is that the Fibonacci sequence repeats itself in the market and allows us to predict things like pullbacks or breakouts or retracement levels. In crypto trading, we can use the Fibonacci levels specifically to spot likely support and resistance or to confirm these support and resistance levels. So before I get to my next slide, let me just quickly show you how to actually draw it on your chart, okay? On TradingView, you're going to go ahead and choose the actual Fibonacci retracement tool, which is right here. Go ahead and click on that. And then what we're going to do is we're going to go from the swing high down to the swing low, okay? Here I'm on the daily time frame, so I'm doing this a little bit longer term to show you guys this. And you guys are going to very quickly notice, well, what's happening here? Well, first off, we're at all-time highs. Guess what? It perfectly aligned with our 1 level on the Fibonacci, which is our peak high, and the 0 level is our peak low. You'll also very quickly notice a few things. Do you notice how over here at the 0.5 level, it correctly predicted resistance? How about over here, 0.618? We had a little bit of a breakout, then we pulled back, then we went up even higher. Like I said, right, these different levels can be support or resistance. And as always, right, previous support can become resistance if we lose it. And previous resistance can actually become support. Perfect example is the 0.5 level right here, right? You can see that it was clearly resistance, but then it actually caused the breakout, right? And we haven't retested this yet. But this is what I really want to teach you guys today. The Fibonacci retracement levels, okay? This is very simple. And instead of focusing on a bunch of different areas and lines of the Fibonacci retracements, I just want you to focus on a few here, the most important ones. What you're going to see is that there is a very common level, which is the 0.618. This is known as the main Fibonacci retracement level. What this retracement level is, in the case of a bullish move, okay, like we're currently getting here, is that we will typically get some type of retest at the 0.618 level. So let me go ahead and just try this out back here, right, where we actually had gotten a significant move, right? Let's go ahead and do it actually right over here at this previous breakout area, okay? So let's go ahead and redraw it, right? Just look back historically. That way we'll have some nicer data. We'll look back what happened here, okay? When we hit 1, we then went back and tested 0.618, okay? So we actually retested this level. How about, are there any other examples of that? Well, I believe there is. If we go ahead and do our Fibonacci extension towards the first breakout over here, okay, we can delete this one just to make it cleaner. Look at this, guys, 0.618. We moved higher, we came back, we tested the 0.618 level. Now, this is on a longer term time frame where we then get these breakouts and, end up, pulling back more. But sometimes you'll have this on shorter time frames where you're actually going to hit the 0.618, and that is typically a buy area, okay? And in fact, if you had bought the first 0.618 retracement here, yes, there was a bit of a dip after, but guess what? There was a substantial bounce, okay? Because there usually is the first time we actually retest it, there's usually a very big bounce. So this is actually a buy opportunity, okay? And like I said, you can use the Fibonacci on any time frame, right? So if I just go to the 4-hour chart here, right? I removed this one because it was for the daily indicator for now. And I just go ahead and take my swing high to swing low on the 4-hour chart. So let's go ahead and do that just to show you on a different time frame. Swing high to swing low. And same thing, guys. Well, do you notice anything? Yes, indeed, guys. We actually hit the 1, came back to the 0.618, okay? And then got our bounce. Keep in mind that when you're getting your initial bull move on the first retest of the 0.618, it is a buy opportunity. And as you can see here, it would have worked down again. How about if we're seeing a bearish move downwards? Well, it's the same thing in reverse, guys. The 0.618 will act as the area that we're predicting a bounce towards. But instead of us buying there, we're going to short that level because that means that's probably where we're going to top out. So let's go ahead and try this on an actual shorter time frame here. Now, once again here, we're going to go ahead and do our swing high to swing low, okay? And what are we seeing here, guys? Well, when we got our first move downward, where did we bounce to? Did we bounce to 0.736? No. Did we bounce back to 1? No. You got it, guys. We bounced to 0.618. We actually bounced here a few times, right? But we never went over it, so this would have been a beautiful short area. And then what happened? We got a major drop lower. How major? Well, 20% plus on Bitcoin. So this is my key bit of wisdom that I want to give to you in this video. If you like what I'm teaching, make sure to check out the Mastermind Trade Club on Telegram, guys. Link in the description down below. Thank you for watching.